We begin with breaking news out of Washington just moments ago. President Trump talking everything from tariffs to Apple to the dollar to Fed Chairman Powell just moments ago. Kayla Tausche was listening in, and she's live at the White House. Hi, Kayla.
Hey, Tyler, it was a grab bag of topics for the president on this Friday afternoon, just days ahead of the first round of face-to-face trade negotiations since a truce was notched with China at the G20. President Trump injected some pessimism into that outcome. Listen.
China will probably say, let's wait. It's 14, 15 months till the election. Let's see if one of these people that give the United States away, let's see if one of them could possibly get elected. And I'll tell you what, when I win, like almost immediately, they're all going to sign deals.
Of course, that was the strategy that China employed going into the 2018 midterms, and the truce at the last G20 was notched just a couple of weeks afterward. But it's unclear whether the president was saying that because of conversations he's had with his officials to say, don't expect anything big this time around. We know expectations have been tempered. But one thing the White House is not going to be doing ahead of those trade talks is devaluing the dollar. During a meeting this week, President Trump rejected an idea floated by Peter Navarro, his trade advisor, to devalue the currency to introduce capital controls. And in that same Oval Office meeting, President Trump said he likes that the U.S. economy is strong, the stock market is high, and that people want to move their capital into the United States. But he expressed some consternation about the many interest rate hikes that the Federal Reserve has put in place over the last 2 years, and expressed some envy for what other central banks are doing around the world. And then finally, on Apple, he tweeted earlier today that Apple would not be getting any waivers from forthcoming tariffs if they were to be put into place on smartphones and Apple products. And he said that maybe Apple would build a factory in Texas. That would be a good thing to do. He offered no more details on whether that was in fact in the works. He said he had a lot of respect for Tim Cook, but didn't say whether the two had actually discussed that. Tyler?
All right, Kayla, it was, as it so often is with President Trump, a wide-ranging discourse. Kayla Tausche. Let's trade it, guys. Let's start, if we could, with him seemingly lowering expectations on a trade deal with China. Is that already in stock prices, or is there a way to trade what he said there, casting a little bit of doubt that anything was imminent?
Well, first of all, Tyler, welcome to the big show on Friday.
Good to be
Great
here.
to have you. And I think we've talked about this. There are times where you almost get the sense the president oscillates between market is in a good enough place where he can actually take the political advantage of actually going very hard on some agenda that politically is very, very popular. So what's interesting is to hear the whole dynamic about the dollar. The dollar strengthening. We're near almost 2-year highs on the dollar. It's been slowly creeping higher. And if you think about every other central bank around the world, and again, he started talking about those banks, who do you think they're following? They're following the Federal Reserve. And in terms of monetary policy globally set by the U.S. is actually making the dollar stronger.
So the dollar is getting stronger. But come back to the China question for just a minute. Is that all already in the prices?
Listen, I don't think so. I mean, when you think about it, we have the Fed on Wednesday. That's really going to be the primary focus between here and then. And I obviously think that, rates have moved in front of that. Dollar has not moved, as you might have expected, into a well-defined rate cut. But right after we get that Fed commentary, then it's really all about trade. And so when you think about what he said, he actually said that they're trying to wait it out. I would actually extrapolate that to Tim Cook, the CEO of Apple.
That's fine. Tim Apple, just fine.
But think about this.
Like
if you're a company that has spent decades creating a supply chain around cheap manufacturing in emerging markets like in China, the idea that you would change anything in a monumental way before you know what the landscape is, what the trade landscape, before there is a really so that's not happening. And just the MacBook Pro that they're talking about, they just moved production from Texas to China. They're not going to turn that around.
But what they are doing, what they are thinking about doing, is moving from China to India or China to Vietnam, and they're going to try to take 15% basically away from China.
But the point is, what does that do?
Diversifies because they're too reliant on China trade. So fool me once, fool me twice. That whole saying, they don't want to let that happen yet again. And this is a stereotypical Trump, keeping his foot on the gas, trying to put the pressure on everybody, Apple, China, and the Fed.
Let's get back to Tyler's question, because, I mean, once again, I think what's very interesting here is Dan alluded to, like, the Federal Reserve is Trump's the trade question 5 times over. Because if you think about where we are right now, it's really all about interest rate policy. It really is a Fed where 25 has certainly been already given to us, arguably 50. That sets up the disappointment. And on a week when maybe the White House then gets more aggressive on their trade rhetoric, not a good combination.
And what did the Fed say were the 2 key drivers of cutting rates? It wasn't exactly global growth. It was trade and lack of inflation. So he has a vested interest in keeping that dialogue and that narration consistent going into the Fed.
So let's talk a little bit about the Fed. I mean, the Fed is his whipping boy, right?
Yep, for sure.
And certainly this morning, Larry Kudlow comes out on the White House lawn and he says basically there have been 7 interest rate hikes that we've had to deal with. That's been a headwind for us. We would have been it has been much harder than it would otherwise be to get a 2.1% GDP print in the face of those interest rate hikes. And he said, with respect to Mr. Powell, not a fan.
No, that's right. And I think the president's going to continue to job on the Fed. But let's be clear, as far as Fed independence goes, this is not new. Presidents have been doing this to the Fed for decades and decades and decades. So I think the Fed is going to do what they're going to do regardless of what the president says. And I think they're going to focus on the ECB. You have this race to the bottom, so they're going to have to keep pace unless they want the dollar to go crazy. They're going to point to inflation. If you look at unit labor costs, for example, productivity has gone up. Unit labor costs have come down. Typically, that leads core inflation. So I think what you're going to see as you move into the second half of the year is inflation continue to miss the Fed's target, and that gives them additional cover to cut.
He seems very envious of the fact that in other parts of the world, interest rates, like Europe, are lower than they are here. He's envious of that. He wishes that he that he had a different guy at the Fed. He wishes that he had a different dollar to deal with. Is there a trade here for us in this?
It really is a function of expected growth, and that's what interest rates, with the 10-year at 2%, which was 3%, 7 months ago. It's like we're much further along in this recovery in this 10 years since the financial crisis. And if you think about it in a lot of ways, the financial crisis in the U.S. was a rolling financial crisis. It hit Europe, and some would say if you look at the banking sector there and you look at the negative yielding debt there, it's not out of the woods. And then everybody, the boogeyman, is obviously China. So the fact of the matter is we're 10 years out and we're doing a lot better than everyone else. That's why the dollar where it is. Why rates are where they are, it makes no sense.
You said where's the trade? The trade is buy equities. If you are going to have consistently low and lower rates going forward, then you have to get pushed into the risk assets. Risk assets are the equity markets. That's where you still go.
Now, there's no agree. And you've got the BOJ next week as well. And talk about a race to the bottom. I mean, these guys have been arguably fighting since late 1980s. But certainly Abenomics has been a massive failure. But it's all a function of the U.S. Fed. Let's be clear. I mean, the fact that Greece trades 5 bips over U.S. Treasuries is absurd. The whole reason the ECB has the mandate they have is because of Greece in the summer of 2011. So, I think you've got a case where, yes, equities continue to be the best place. We've seen the stock market rally at a time when you really didn't have a growth dynamic. And the rally that's taken place in the last 2 weeks, Tyler, is one of significant breadth relative to what we had. That's a place where pullbacks are shallow.
So in the minute or so we have left here, we've got a very busy week ahead. There's the Fed, obviously. We've been talking about that. There's the China talks over in Shanghai. We've been talking a little bit about that. And there's an unemployment report that will come out on Friday. And I believe it is next Friday, Apple's earnings. There's a lot to chew over there. What do we think about Apple?
Well, I think again, the issues that where Apple could get thrown into trade war, it was a trade war stock at one point. It's actually shaken that off. Then it's a deregulation stock. I think it's kind of found its way out of that. Apple's going to come really right back to Apple. And I'm sure Dan's going to point out the critical reality of what's going on with handsets. And it's a debate over services growth versus the overall. And then what's the multiple you want to put on this company if you're doing a blended multiple for a services business that's still not where it needs to be.
Yeah, but to be very clear, over the last year, the volatility in Apple's stock for a $1 trillion company that's had these peak to trough declines of 30%, 20% here and there, it's been about China. And it's about Huawei, too, because Huawei is kicking China's butt in China right now. And we know kicking Apple's butt. They have 4 times the market share right there. So when you think about how complicated this is, 20% of Apple's sales come from China. Tim Cook has to play this both ways, and he really does have to. He has to thread the needle here, and this is going to be one that I think Apple is probably one of the most important pieces of this entire
trade. You think it's going higher?
Well, stay tuned. Options action. We're going to hit that.
Well, just quickly remember how important Apple is, right? It's no longer a growth stock. So if you're playing style, value versus growth, it's now an 8% weight in the value index. So it's very important for value investors right now.